So Charlie Munger says that 3 stocks is adequate diversification. What's your latest thinking on appropriate diversification, and how has that changed over time?
Yeah, I mean, I have like a very non-scientific approach to diversification, which is that I've always had around 10 stocks in the portfolio, and there's nothing scientific about that. I know if I have too many stocks, then I'm just going to replicate the index, and if I have too few, if they run into problems, then I'm potentially going to lose all the money. So I want to be sort of somewhere in between those two extremes, and I've always felt 10 is very much on the safe side, because if you've got 10 stocks and one were to go to zero, which I hope wouldn't happen, but theoretically could, then you'd still have 90% of the money left, which seems like a level you could easily recover from. I think it could be easily less than 10, but I just view that as my sort of margin of safety. I'd rather sort of be on the safe side than have too few, but 3 probably works out fine, especially if the companies are quite sort of diversified and have different businesses. So if you think of like a Berkshire Hathaway or an Amazon, in many respects, they're one business, but they're one business which contains lots of different businesses within them. So 3 would probably work, but why take the risk?